Because when you think about what I'm saying, if I'm right, this is going to be worth 10x where it is today. And that would make it the size of gold. And gold, Julia, in terms of the overall capitalization of liquid assets around the world, at $18 trillion, it's still quite small. It's still quite insignificant. So Bitcoin can get to that number, frankly, without surprising anybody, without having it be a monumental move or monumental monetary crisis anywhere in our society. You know, I said at the beginning of this year, halving cycle's coming in April. Wherever this thing is in April, it'll be 4x that by the end of the cycle. Much higher, like 150 to 300 over the next 5 years.
Scaramucci asserts that Bitcoin's current valuation is artificially low due to past regulatory challenges. In his view, the recent price movements are not indicative of Bitcoin's actual value, but rather a correction to where it should have been years ago. He points out that Bitcoin is still in its early stages, drawing parallels to assets like gold. Bitcoin's market capitalization, around $2 trillion today, is comparable to major tech companies like Apple or Microsoft. However, as a distinct asset class, Scaramucci argues Bitcoin could eventually rival gold's market cap of $18 trillion. This would represent a 10x increase, positioning Bitcoin as a key player in the global financial system without requiring a seismic economic shift.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I said that it was going to 100,000 at the end of 2022. It was 69,000 in November of 2021. I said, we'll easily get to 100. Here are all the reasons why. What happened is because of the proactive suppression of the digital economy, digital assets in the United States by Elizabeth Warren and Gary Gensler, the prices that you're seeing today, in my mind, people say, oh, wow, Bitcoin zoomed up. No, Bitcoin was artificially suppressed by poor regulators, capricious, arbitrary, czarist-like regulators that have now been removed from the system due to the fairness of a democracy, and they're gone. And so now the price is back to where it should have been and could have been in January of 2022. And so I think these prices are actually low. I think these prices are going a lot higher once we get bipartisan clarity on what a security is versus a token. What's the clarity on stablecoin regulation? What are the rules? Okay, will the SEC rescind its lawsuit against Coinbase and Kraken and then provide rules? Well, now all the SEC has done is they're trying to regulate by enforcement, and they're forcing people to spend millions of dollars on legal fees and shoot in the dark trying to get something right. Brian Armstrong is a compliant guy, okay? Trust me on that. The Kraken guys paid fines. The Kraken guys have tried to comply. These guys keep bringing lawsuits. You don't tell them what the rules are. They will follow the rules. All you have to do is tell them what the rules are. Once that happens, these prices are going a lot higher. I don't want to start throwing out, price targets because I get them wrong all the time. I said 100. I said at the beginning of this year, halving cycle's coming in April. Wherever this thing is in April, it'll be 4x that by the end of the cycle. It was 60,000. I said, okay, you'll get to at least 170,000 by the end of the cycle. This stuff will happen a lot faster now because of positive regulation ahead.
Yeah.
And so just imagine these 6, 7, 8 major banks, once they can custody and hold Bitcoin, how important this asset will be. And I'll make one more point on this. Bitcoin's at right now, as you and I are speaking, at about $2 trillion roughly in terms of its market capitalization. So that's like Apple, Microsoft, NVIDIA. It's in that $1 to $3 trillion zone. So it's stock. But if it's an asset class, it should trade to at least where gold is, which is at about 18 or 19 trillion. So if you believe, and I believe, because when you think about what I'm saying, if I'm right, this is going to be worth 10x where it is today. And that would make it the size of gold. And gold, Julia, in terms of the overall capitalization of liquid assets around the world, at $18 trillion, it's still quite small. It's still quite insignificant. So Bitcoin can get to that number, frankly, without surprising anybody, without having it be a monumental move or monumental monetary crisis anywhere in our society.
Still early innings then, I take it.
Very early. Yeah, no, you're very, very early. You're not in the micro point of early, but you brought up something interesting. Even if I had the wisdom and the intellect and the foresight to buy Bitcoin in 2012, which I did not, okay, I was blinded by my own biases. I was blinded by my own institutional thought process on Wall Street. So I didn't understand it. But let's say I did. It was trading, I don't know, $50, $60, whatever it was. But I still wouldn't have been able to buy it. I wouldn't. Yeah. I don't even.
Or you'd be kicking yourself because you'd be like, "Oh, my thing's in a landfill somewhere or something," or "I lost the key." Yeah,
right. Or
that would be really painful.
I would have bought it and lost it, or
sold it.
Didn't have the foresight. Now the Winklevosses did. In 2014, they had a settlement with Facebook and Mark Zuckerberg, and they said, "You know what? We're going to roll this money into Bitcoin." And I give them a lot of credit for that. And they had a conversation with me about it. It came to SALT. They talked to me about it. And I was afraid to do it, and I think that happens to you in life. You see something, it's not clear, it's not obvious, you don't want to be embarrassed by it, and you don't do it. And then I saw it, and I said, okay, I'm going to do it. And then guess what, Julia? I got embarrassed by it.
FTX and SBF.
I bought it at 17, it went to 69, then it went back to 15. But thank God, okay, I had, at least at this point in my career, the patience, the wisdom, the luck, whatever you want to call it, to hold it. And so I held it. And now we're sitting here at 93. I think it's going to go much higher, like 150 to 300 over the next 5 years. Can't pinpoint it, but I think it will. And I want to be a part of it. And I want my clients to be a part. I want my clients to not miss out on this. And I want them to be a part of it with us.
Scaramucci envisions a future where Bitcoin is an essential component of the global financial system. He compares its adoption curve to that of other transformative technologies, such as the Internet. As more people and institutions recognize Bitcoin's value proposition, its adoption will move from the early adopters to the mainstream. He believes that governments and central banks will eventually view Bitcoin as a strategic reserve asset, acknowledging its importance in maintaining economic competitiveness. Scaramucci applauds policymakers who support crypto innovation and calls for legislation that provides clarity and encourages growth in the sector.
What these guys did was they created a network. They said, we're not going to trust one person because we're going to have hundreds of thousands of validators where they're going to be examining these transactions and codifying them. So we don't have to trust anybody. We'll just trust the system. And this was a brilliant idea. This was a unique thing because they created a hard asset. And they also created an asset that can't be corrupted, because one of the things that happens with money from the beginning of time, once we understand what the money is, and if typically we've gotten that money from a third party known as the government or the local community when we were in small villages, wampum, seashells, you pick whatever it is, they make more of it.
Yeah.
And they corrupt it. But here's this thing, it's immutable, it's not corruptible, can't make any more of it. And therefore, he said in that white paper, I don't really have the time to explain this to you, but if it catches on, you may want to buy some of this though, if it catches on. And so that phrase, if it catches on, in my mind, I've extrapolated that to mean that it needed to become part of the artifice. It needed to become part of the financial system to be fully adopted. And by the way, more evidence of that, I've talked to several CEOs of big banks, largest banks in our country. They're my age. I sit down and talk to them. Yeah, I can't really put Bitcoin in these investment portfolios yet, until my bank can custody Bitcoin. That's a SOB 121 issue. I really can't go too crazy on Bitcoin. Yes, we'll take reverse inquiry on Fidelity or BlackRock's Bitcoin ETF. If someone calls me and says, buy me $100,000, yes, we'll put it in custody with his CUSIP number. But until we can actually hold digital Bitcoin and its expression in a wallet, in our bank, and it's appropriately accounted for from a regulatory capital perspective in a way that we can make money off of it, I can't get close to Bitcoin. And I think that's coming. He sees it as a potential strategic reserve issue for the United States. He sees it as something that the United States needs to be a big part of. And so I applaud him for that. I like calling balls and strikes on people. And I think they've done a good job so far of laying out a framework. And the last thing, which I think is also very important, is there are senators like Gillibrand, our senator here, and senators like Schumer, senior senator from New York, that have told people privately, myself included, that they want cryptocurrency, stablecoin clarity in terms of what the legislation is going to look like. And they're hoping to do that in the first year of the next congressional term. So for all those reasons, from a regulatory point of view and from a demand point of view, you'd have to be bullish on this asset class. I know how pension fund managers think. If you're not long Bitcoin, you're short Bitcoin. And let me explain why. Because it will eventually be in the pie chart of global tactical asset allocation. So every big pension fund has some gold. Every big pension fund has real estate. They have private equity. They have stocks and bonds. They have other assets. And Bitcoin is going to work its way into that asset mix. And again, maybe it'll only be, Julia, 1 or 2%, but then you'll need to own it, right? Because you're going to be compared. When the consultants come in to speak to you or your board comes in to speak to you, they're going to compare your performance to the overall pie chart of tactical asset allocation. And Bitcoin's going to be part of that. And so you got to get long it, because if you're not long it, you're going to be short it.
Scaramucci candidly shares his own journey with Bitcoin, admitting that he was initially skeptical due to his traditional Wall Street background. Over time, however, he recognized its potential and decided to invest. While he faced setbacks, such as the fallout from FTX, he remained patient and committed to his long-term vision. This resilience has paid off as Bitcoin's value continues to rise. Scaramucci emphasizes the importance of seeing past short-term volatility and focusing on the broader trends that drive Bitcoin's growth.
Please like and subscribe my channel.